In 2021, Bitcoin prices reached yet a brilliant record, flirting with $69,000 price level, as the digital currency benefits from numerous tailwinds. Upon attaining this level, it had rallied close to 140%. After coming close to $69,000, the cryptocurrency fell back, but only slightly, failing to drop below $68,000. Following that very modest decrease, it recovered, trading close to $68,600. When explaining these gains, market analysts cited several developments at the time, which ranged from anticipation surrounding the Taproot upgrade to the inflation figures and how they might portend a greater interest in Bitcoin. Now that we are approaching the bull year, what are the expectations? So far, it has been a long ride, filled with unrealistic speculations, crazy price spins, dampening regulatory actions, and shocking crashes. We have ridden this far. Bitcoin's recent rally may have taken it past the $42,000 mark and helped put the crypto winter of 2022 far in the distance. However, it is worth remembering that it is also the year of the largest cryptocurrency by market capitalization started on shaky grounds at a mere $16,500 level. Ever since BlackRock originally filed its spot Bitcoin ETF application with the US Securities and Exchange Commission in June, the impending approval of such a financial product has been the key area of focus for the crypto market. Every anticipation for the crypto market is revolving around it. So far, retail investors can only gain cryptocurrency exposure through ETFs that trade in cryptocurrency futures. A spot Bitcoin ETF would allow investors, especially retail investors, to gain access to Bitcoin without holding their investments in a Bitcoin wallet. Every analyst out there expects big money to flow into Bitcoin spot ETFs if the SEC gets its approval, and that optimism has helped boost the price of Bitcoin, with the spot Bitcoin ETF market expected to grow to over $100 billion over time, according to a report. Another report from Galaxy estimates that inflows in spot Bitcoin ETF products could rise from $14 billion in the first year to $39 billion within 3 years. However, there is still uncertainty around the SEC's decision. The SEC has reportedly held multiple rounds of talks with prospective ETF issuers, with issuers amending applications to meet regulators' expectations. There have been hints about a looming approval early next year. I'm optimistic, but I think quite likely that we'll have another round of rejections before we get positive news, BitGo CEO Mike Belshey recently said. BlackRock and others have also filed for spot Ether ETFs. However, the likelihood of approval for those products tied around the alternative crypto asset is similarly unclear. While waiting for the SEC to give a response, the upcoming Bitcoin halving event gives hope for a brighter 2024. Bitcoin halving is an event that roughly cuts in half rewards for Bitcoin miners for successfully mining the cryptocurrency, and is expected to take place in 2024. It's important since at 21 million, the supply of Bitcoin is finite, making it harder to mine as more Bitcoin comes into circulation. Bitcoin miners are rewarded for successfully mining a block, and the reward gets diminished with a halving, indirectly impacting the number of Bitcoins in circulation. Also, the crypto market's boom and bust cycles have generally revolved around the Bitcoin halving event, which happens roughly every 4 years. According to a report from Grayscale, there is reason to believe that this halving event, plus any positive tailwinds from a spot Bitcoin ETF approval, could be more impactful than what it was in the past. This is due to the current distribution of the Bitcoin supply, which is largely held by entities that tend to hold for long periods. There is also an important metric to look out for. With this metric, the heightened level of optimism connected to the crypto market in the coming year makes a whole lot of sense. It's the Bitcoin dominance. Bitcoin dominance has become a key statistical measure of the overall state of the crypto market. Due to Bitcoin's haven status and role as the preeminent crypto asset, measuring its market cap in proportion to the rest of the crypto market provides valuable insight into market sentiment and investor behavior. Bitcoin is the world-leading cryptocurrency, accounting for over 60% of the total market capitalization. This is largely due to a strong network effect and liquidity, making it the most popular digital asset for investors and traders. As noted in several reports, Bitcoin's dominance is the percentage of the entire cryptocurrency market capitalization held by Bitcoin. It is calculated by dividing the market capitalization of Bitcoin by the total market capitalization of all cryptocurrencies. For example, if the total market cap of cryptocurrencies is $1 million and the market cap of Bitcoin is $500,000, then Bitcoin's dominance would be 50%. Pretty simple. There are a couple factors connected to sustaining this metric. Investor sentiment plays a major role in determining Bitcoin's market dominance. When investors are bullish on Bitcoin, they are more likely to buy and hold the asset, which can further increase its market cap, hence its dominance. On the other hand, when investment sentiment is bearish, investors are less likely to hold the asset, and this could lead to a decrease in its market cap. Furthermore, the regulatory environment in which Bitcoin operates can also significantly impact its dominance. We've had a rough year with different regulations from the Securities and Exchange Commission. If regulatory authorities support Bitcoin, which is the expectation of almost every investor, This can encourage more investors to enter and increase its market capitalization, allowing it to maintain its dominance. However, if regulatory authorities are hostile towards Bitcoin, this can discourage investors from investing, decreasing its dominance as a result. As more people adopt Bitcoin, its market capitalization and dominance will also increase. Plus, supply and demand are also major factors that can affect Bitcoin's dominance. If there's an increase in demand for Bitcoin, this can increase its price and market capitalization, allowing it to maintain its dominance. Well, even with multiple challenges to its reign atop the crypto market and the FTX trial providing daily sentiments for crypto skeptics, Bitcoin has reached market dominance levels not seen in months. The crypto asset market has had a tumultuous time since many tokens reached all-time highs in 2021, with the tumult ending soon because of the trial with Sam Bankman-Fried and FTX at large. Even with various headlines dominating media conversation around crypto assets, the return of Bitcoin dominance is a very important trend that has surprisingly flown under the collective radar. Bitcoin has long been the leader of the crypto market, and its continued dominance is good for both Bitcoin investors and the crypto sector at large. Last month, the popular cryptocurrency trader and analyst Benjamin Cowen predicted that Bitcoin's market dominance may continue to climb in the coming months. In his analysis, he shared his belief that altcoins could bleed against the leading cryptocurrency. Cowen also stated that investors may want to consider exposing the majority of their portfolio to Bitcoin until its market dominance stops climbing. This is because he anticipates that Bitcoin will lead the next bull run before alts begin to rise in the next cycle. This was not an opportunity to say that he doesn't think that altcoins will rise against stablecoins such as Tether and USD Coin. Nevertheless, he maintained his view that Bitcoin should make up the majority of investors' cryptocurrency portfolios. As a support for his strategy, Cowen mentioned that the market leader continues to be the best performer in the market and protects investors from potential downside the best. Furthermore, according to the analyst, the recent rallies seen across the altcoin sector have not led to the altcoin market cap breaking above a key bull market support. Moving forward in his analysis, Dan Gambardello, founder of Crypto Capital Venture, mentioned that Bitcoin's dominance reaching between 60 and 67% was still a possibility. Nevertheless, he speculated that the market leader dominance could drop significantly as the halving event approaches. He also believes that even if traders exit their positions in Bitcoin and direct their capital towards altcoins, cryptocurrencies like Cardano and Ethereum will be the main beneficiaries. With regards to Ethereum, he highlighted that it has a first mover advantage in the altcoin market, which could see it as one of the best performers in the next altcoin season. Well, since adoption is one of the possible drivers of Bitcoin dominance, it could work in favor of the crypto market. Even though the US government does not buy the idea of cryptocurrencies, hope could be hidden somewhere. At least Bitcoin proponent and Senator Cynthia Lummis has said that she would like to see US residents diversify their retirement accounts by being able to include cryptocurrency investments. Lummis, being the first woman from Wyoming to be elected to the Senate, said that she supports people in investing in cryptocurrencies of their choice if they're illegally permissible. I would like to see cryptocurrency, like Bitcoin, become part of a diversified asset allocation that is used in retirement funds and other opportunities for people to save for the future, she said during a CNBC interview. She added, "So whether you're an employee that has a retirement fund, I like to see those retirement funds invested in Bitcoin and other cryptocurrencies that are good stores of value. But I also like to see individuals to be able to use Bitcoin and cryptocurrencies of their preference that are safe and have met the hurdles of Anti-Money Laundering and Bank Secrecy Act." This is a call for everyone to keep their eyes on Bitcoin's dominance. The coming year could ride on this metric alone. But that's it for today's video. Make sure you subscribe to the channel, hit the notification buttons, and we'll see you in the next video.